Hi, my friend. This is Jiman Trading Community, and I'll never get tired at this. When it comes to financial market, it needs a lot of care. It's like an operation whereby when you get something wrong, everything will collapse. So, on our previous videos, we have learned about the major markets which make up the global financial market. And we had to see that now we have to engage in them. But previously, we went on top of the mountain, which I am not even getting tired on reminding you. And on top of the mountain, we found global financial market. And inside the global financial market, which was one of the most important things we wanted, we found out that it was like a marketplace and we have to see what is inside. We took four major assets which are traded globally and which are forex, which stands for money. We have crypto, digital currency, we have stocks, which is companies, and we have commodities, which is raw materials that we engage with. And now we ask ourselves, now how can we engage with them? How can we trade them? Now here, this is where we are going next. So let's start. Hi, in our previous lesson, we have looked at the four major markets which consist almost everything we interact with. Forex, that is money; crypto, that is digital currency; stocks, these are companies; and something that was left was commodities, which is the raw materials and the corner block of the global economy. So in this lesson, we must know how we are going to trade these assets and familiarize with the models of trading and become professional at every aspect. This is the list of the two model of trading. One of the most important, spot or investing trading. This is the first. The second is CFD trading. Now, these two will split everything. People will split here. One will become a CFD trader, the other will become an investor, and still you can become both an investor and a CFD trader. Now, this is the only model of trading in the assets which are normally known. So, and because of time, let's dive in. We ask ourselves, what is spot trading? Spot investing. So, spot trading is buying or selling of financial asset for immediate delivery, meaning the transaction happens on the spot. At the current market price, it is simple and the most straightforward type of trading. That's why it's called a spot trading. In spot trading, you actually own the asset. This is one of the most important things that I want you to take in mind. In spot trading, you actually own the asset. So when it comes to crypto, you buy a crypto, you own Ethereum, you own USDT for immediate ownership. You own that asset. When it comes to shares, you own the thing when you are doing a spot investing trading. You own that asset. When it comes to forex exchanging US to euro at a current rate, and you have commodities, you buy gold or oil at a current market price for immediate delivery, physical or digital, you own that asset in the spot investing trading. Example, you buy 10 shares of Apple, you own those 10 shares. So you have seen in this model, you interact with the asset directly, like owning the asset itself. And let's go to the next model. Let's go to page 2. Now this is CFD trading. What is CFD trading? CFD trading is contract for difference trading. It is type of financial trading where you speculate the price movement of an asset without actually owning the asset. Take it this. On the other model of trading, which is spot or investing trading, you own the asset. But on this, you don't own the asset. Your job is to speculate the price movement. To speculate the price movement. So what you have to do is to have some contract, the amount what you want to like to bet on, and then you get paid the difference or you pay the difference. So let's go on. You don't own the underlying asset, whether it is stocks, crypto, or forex or commodity. You don't own that asset. You are just paid for the speculation of the price movement, and there is a system of doing that which will go deeper on when it comes to CFD trading. But this was to learn the two model of trading. And on this video, on this course, we will separate ourselves on each and every model. So let's go on. Think of a betting on whether the price will go up or down, and your profit or loss depends on the difference between the entry and the exit price. Think of a betting of whether the price will go up and down. Just bet. And then the profit or loss depends on the difference between your entry and the exit price. So if you enter a position where you predicted or betted that the price will go down, where you open the position and the price goes down, when you close, the difference from your opening and your closing, that's what you'll be paid. And the difference from your opening against now you are betting, you betted the price would go down and it went up, you'll pay that difference. Look, if price moves in your favor, you make money. If price moves against you, you lose money. So the formula is simple. The formula is profit or loss is equals to closing price minus opening price. You multiply by contract. You'll see the word contract stands for amount that you need to move in the market on any asset that you think of. Now you can see the difference in this model. You don't own the asset, you make money on the price difference. I know now you have an idea of this field. Same asset, different way of interacting with them. At this point, there will be a split of each model. The next lesson is how can we access this asset digital and who can help us. Now, my friend, before we go on, we went on top of the mountain. On top of the mountain, we took something called global financial market. And the global financial market, it was a marketplace. Inside the marketplace, we had to look for something to trade. Now we took the four major assets which are traded globally, which are forex, stocks, commodities, and crypto. And then the next question was, how can we trade them? Then, before even going to trade them, we had now to know there are two ways of trading them. One is spot trading, the next is CFD trading. Spot trading is interacting with those assets directly, owning those assets. And CFD trading is trading on them on their price movement, price difference. And we have seen even a formula which for us to go on a profit or loss is equals to our opening price to our closing price. We multiply by the contract that we took. Now you can see the difference. Same assets, different way of interacting with them. The next lesson is how we can access the assets digitally. Now we have two models of trading. How can we access this now, these assets digitally, and who can help us? We want to do it. How can we? So there's someone to help us, and we will know, because now in your mind you can decide who you would like to be in the market, investor or a CFD trader. Now, my friend, that's the end of this course, but we have another page which we're gonna look. Let's see. It's just a little explanation. So we can see that investing an asset or even acquired with a goal of generating income or appreciation over time. This is investing, which is spot trading. So when we invest, we don't expect those fruits overnight. We have to wait. And when it comes to invest risk radar, we have these are the things that we talked about, which have cash, which is forex. We have bonds, these are the government bonds. They are even participants in the global financial market. We have mutual funds, we have EFTs, which stand for the commodities, because in the commodity industry they don't come in the market directly. They come either in future or EFTs. We have stocks. Those are the things that make up the global financial market. For the contract for difference, the CFD, arrangement made in financial derivative trading, where the difference in the sentiment between the open and closed trading price and cash settled. So that is the contract for difference. And here below you can see, you sell here, you buy at the low. Now you are paid this, the difference. This is what you are being paid. Now the distance will be multiplied by the volume that you traded. So on that we'll dive deeper, but for now you have seen the two model of trading. Now you have to see, now we have to learn how can we, and now who would help us to do that, who would help us to do that in these two models of trading. And with further ado, I think it's my time to leave, and it's your time to subscribe and like and turn the notification bell for the next video. So thank you very much.